Hello folks, I'm LA Little and this is today's short take. You know, the oil and gas industry took a drubbing. They got beat up pretty bad. They've been on a pretty good bounce from that. They were down 25% off the highs. If we're looking here at, say, the XLE as an example, 101 down to about 75, actually even lower, down to 71. So really 30 bucks off of 100, so a 30% drop. Nice bounce, right? Coming back up into a resistance zone. Yeah, they can get a little bit farther up. No volume on the way back. No, this is a recipe for disaster if you're piling into this with the ideal of a long-term trade. It's going to take a while. It always takes a while. When you get this kind of demolition, the first couple of bounces are bounces. It's consolidation. Yeah, they get higher. They're not going out of business. They will rise eventually. But if you're playing these, they're short-term trades still until you know the bottom is in. And that bottom will be in when this duration matches the next, probably. So in other words, if you go back to the highs, it was June. If you go to the lows, it was January. That's basically 7 months. Take 7 months out. It takes you out to September or so. That's about when these things probably bottom. So there's another 2 or 3 months to go before you see that bottom, more than likely, if it is a bottom. If you look at the stocks within the group and just look at some of the large ones, ExxonMobil, and you look at them on a daily, they're making pretty nice bounces on the way back. Schlumberger definitely has made a big bounce. Gas and refining has been the best. Phillips 66, a good example of that. And on down the line. The trade is, the long-term trade is on the next decline most likely. That's the one to watch. That's probably where the best prices in terms of a longer-term trade are going to be found. That's the oil and gas industry, and that is the short take.